Hello investors and traders. So today the stock market crash, we can see that S&P is down more than 4%, Nasdaq is more than 5%, and let's check out why and speak about the reasons. So today it was released the new data about the inflation. We can see that the inflation now is still above 8%. It's a lot year to year, and of course the inflation will stay elevated, so the Fed will have to raise its interest rate, and we in the future weeks most probably will see another hikes. This point, of course, very bad for the stock market, because we would like to see more money in the market, more liquidity, and until this time of hiking interest rate won't stop, it's hard to see the stock market raise. And let's check the S&P 500 chart right now. In my mind, yeah, it's a weekly chart, so I think it's expanding, leading diagonal now. We are already trading. It was the first wave, the second, the third, the fourth, and now in my mind we are going to finish the fourth wave, this figure and this target. Yeah, let me check once again. I think it's will be here. So the target of this wave, it will be about 34.22, but this one, it only the beginning of, only the start of correction. It will be the A wave, then we can see a bounce to the wave B, and then the last wave, the finishing of the ABC correction. Of course, wave C, it will be even lower. So also we can predict the B, the wave B. Let me try to do this. I remind that B is usually as a range of about 30% to 68% of wave A. So if we're considering that A will finish here, so let's use the Fibonacci levels. Yeah, so in my mind, yeah, it will be here. So already this range, most probably we can see wave B. So that's what I'm thinking about the S&P 500. In my mind, we will see in the future weeks the index. We can see there is a high probability that we can see this index lower. If we will check the DXY, the index dollar, also this weeks it hit at all-time high. It's very bad signal for the market. The dollar is very strong now in the whole world, so it's not good for the stocks. And also one moment that for me it's very bad signal. Yeah, it's the bond, the treasury yield. Check this out. The 10-year bonds is now is 3.74, and it's the 2-year, yeah, and the 10-year is 3.41. So we are the inverted yield curve is even now became deeper. So also when we can see a sell-off in the bond market. Of course, the stock market also very hard today. We can see that many stocks, actually all the stocks are in a sell-off today. Target means 4%, Shopify minus 7, Palantir and Netflix, Teladoc, Google, all of them is Zoom. All of these stocks is down 5, 6, 7%. So actually there is no chance for the stocks to bounce in these days. And coming back to the technical analysis, yeah, I'm thinking that's this chart is very possible. So now we will, if we will broke this level of this support level of 4,000, so there is the first target is 33 and 80, and then after a small bounce we can go even lower. So we will see, we'll check. Of course, I will update you about the situation in the market. So if you're interested in the stock market, dividend stocks, I have in my channel a lot of analysis of stock market, US market, Canadian market. So subscribe to my channel, and see you in the next time. Bye.